Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 338 on August the 31st, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on B. Riley Financial Inc., Match Group, and SoFi Technologies Inc. And we discussed three new trades on AST SpaceMobile, VF Corp, and the VanEck Vectors Gold Miners ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, it's been a few weeks since I've gotten to say it, but we closed this week at new all-time highs in both major indexes again. The Dow Jones Industrial Average grew 850 points, closing the week at 41,563 points. The S&P 500 index picked up 13 points, ending the week at 5,648 points. And now it's time for the topic of the week. The topic of the week is scaling. Someone emailed me recently and wanted to know how to scale their trading. That's a great question. If you've had consistent success with your strategies, the only way to make more money is to scale. Now, on this show, I typically discuss numbers in terms of a one lot. When I say a one lot, I mean one option or one spread. You might want to deploy more capital. So how do you do that? There are three main ways that I think of scaling your trades to make more money. The first is simply more volume. Rather than trading one spread, you trade 2 or 5 or 10. As long as the product you're trading has enough liquidity for you to execute the size, your strategy should remain the same regardless of the volume of options you execute. The second way to scale your trades is to trade companies and products that consume more capital. The capital requirements when you're trading stock options on companies with share prices of less than $30 are quite different from when you're trading companies with stock prices of more than $500 per share. When I first started trading at the CBOE, I was part of a 3-man NASDAQ trading group. At the time, there were 3 products that represented the NASDAQ. First, you had the NDX, which we consider to be the big boy contract. It consumed a lot of capital, and trading over there inherently had higher risk. That was for the most senior trader. Next, we had the mini NASDAQ where I stood. The mini NASDAQ was 1/10 the size of NASDAQ options. Our third guy stood in the triple Q option pit. The triple Qs were 1/40th the size of the NASDAQ. Each product was a mathematical equivalent of the other. If you wanted to put on larger size, you could trade the larger product. Sometimes there was more liquidity in the smallest product, so we would execute a trade over there. Finally, the third way to scale is to do both. Trade higher volume with a larger product. Regardless of how you do it, scaling requires you to do more of something. If you're finding success with smaller volumes, trading more volume will give you more confidence. If your strategy worked with the smaller volumes, hopefully it will still work with the larger volumes. And the beauty of option trading is that your maximum gain and loss are typically known right from the start. The first time I bought a trading course, it focused on pyramiding futures contracts. And the problem with pyramiding futures contracts is that your risk actually multiplied with every contract that you bought. Meaning you could be successful all the way up to the last $10 and the market moves against you $1 and wipes out your entire position. Now, because of the defined risk nature of option trading, your risk actually doesn't multiply. It just simply adds. And that's a beautiful thing, trust me. Just remember, successful trading comes down to risk management. So whether you're trading a 1 lot or a 10 lot, it's important to understand your risk and make sure you manage it properly. So that's it for the topic of the week. Let's go ahead and get into the trading review of last week's trades. So we started off with the cover call on B. Riley Financial, symbol R as in Romeo, I as in India, L as in Lima, Y as in Yankee. At the time, the stock was trading for $6.21 per share. I looked at buying stock and selling the September 6.5 call at 85 cents, hoping for a return of 18.36% in 4 weeks. Now, shares of Riley Financial fell $1.30, ending the week at $4.91 per share. The out-of-the-money call that we sold lost 25 cents, leaving us with a net loss of $1.05 if we were to close the trade out immediately. And, I hate having a loss like that on a stock, but I do always want to point out that if you had just bought the stock, you would have straight up lost $1.30 per share, right? The options actually help to buffer the amount of money that we lost in the trade, gives us a little time to think as well. Now, I typically would roll the strike of the option lower, hoping to cover the near-term loss for the week. Unfortunately, doing the math showed that this would not be the most optimal position to make an adjustment on. The trade I would most look for at this point is simply holding on to the stock for the next 3 weeks and looking forward to selling another option against this stock in the month of October. That is because ultimately selling that next option is going to pay me more, and we're going to hope that the stock goes a little bit higher. But even if it doesn't right now, rolling that option strike lower just doesn't add up. It's going to essentially lock in a loss. Now, this certainly appears to be the best option for maximizing profit in the near term. You always, of course, can just look to close out the trade and walk away. And that's an option too, but I don't mind holding the stock for a little bit, especially given that the next month's options are still pretty juicy. And a great win is when I get to hold the stock and just continue selling another option each month, because what ends up happening is it's almost like you're creating income that way. And then at some point, if the call takes me out of my stock, then so be it. But I'm happy to keep selling options against the shares that I buy. Now, I'll certainly keep track of this stock and the option prices over the next few weeks, because if the premiums come back, it actually might be worth going ahead and rolling the strike lower. But either way, just make sure you do the math for the next 3 weeks and be prepared for what may come. All right. So that's it for the cover call. Next up, we have the credit spread on Match Group, symbol M as in Mike, T as in Tango, C as in Charlie, H as in Hotel. At the time, the stock was trading for $37.32 per share. I looked at selling the September 36 half put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of Match Group dropped 11 cents, ending the week at $37.21 per share. The out-of-the-money put spread that we sold is still out of the money. And even though the stock finished slightly lower, that has not compromised our position so far. The share price is still above our break-even point, so all is well. Remember, when you sell a spread, you hope that time just erodes the value of the spread. If the stock remains above the break-even point, this spread will continue to wither away over the next 3 weeks, which is exactly what we're hoping for. All right, finally, we had a debit spread on SoFi Technologies Inc., symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time, the stock was trading for $7.52 per share. I looked at buying the September 7.5 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 4 weeks. Well, shares of SoFi grew 47 cents, ending the week at $7.99 per share. The in-the-money call spread that we bought is now even more in the money. We are above the break-even point on the trade as well, so no adjustments are needed on this one. This trade is actually winning this first week, so I'm happy, because every now and then you get 3 losing trades on the show, and that really upsets me, to put it lightly. So this trade's a winner for the week. I'll definitely keep an eye on the stock price, like I said, over the next 3 weeks, just in case adjustments are needed. Remember, option trading is not passive. There are some passive investments, like maybe trading bonds, maybe buying CDs and whatnot, but trading options is not passive. So you definitely want to stay abreast, keep track of the stock, keep track of option prices, and that's part of the job for getting such high possible returns. So anyway, nice trade on this one for the week. Let's go ahead and get into the new trades for this upcoming week. Now, all new trades on today's show are going to use the September 20th expiration. That is 3 weeks from now. So these are all monthly options for the month of September. I also want to point out that Monday, September 2nd is Labor Day in the United States. So all of our financial markets will be closed. So we'll have a shorter, a 4-day trading week this upcoming week. So let's dive into our covered call. The first trade, our covered call, is going to be on AST SpaceMobile. Symbol A is in Alpha, S is in Sierra, T is in Tango, S is in Sierra. The stock ended the week at $29.04 per share. I'm looking at buying stock and selling the September 29 half call at $3.30, hoping for a return of 12.95% in 3 weeks. Now you enter this trade by buying stock for $29.04 per share and selling the 29 half call at $3.30. This trade makes the most money if stock prices finish above $29.50 per share. The break-even price on this trade is $25.74 per share, and in real terms, the stock purchase would require $2,904, and you'll collect $330 for selling the option. Next up, we have a credit spread on VF Corp, symbol V as in Victor, F as in Foxtrot, C as in Charlie. The stock ended the week at $18.20 per share. I'm looking at selling the 18-17 half put spread at 18 cents, which could give us a maximum possible loss of 32 cents per spread. Now you enter this trade by selling the September 18 put at 61 cents and concurrently buying the September 17 half put for 43 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $18 per share. The break-even price on this trade is $17.82. In real terms, you'll receive $18 per spread that you sell and have $32 at risk. And then our final trade on the week is going to be the debit spread on VanEck Vector's Gold Miners ETF, symbol G as in Golf, D as in Delta, X as in X-ray. Stock ended the week at $38.60 per share. I'm looking at buying the September 38 half call spread for 32 cents. That could give us a maximum gain of 18 cents, or that would be a 56.25% return in 3 weeks. Now you enter this trade by buying the September 38 call for $1.48 and concurrently selling the September 38 half call at $1.16. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $38.50 per share. The break-even price is $38.32 per share. In real terms, you'll pay $32 to enter this spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for sharing the podcast as well. And hey, thanks to all of you who have reached out via email. Definitely reach out as well if you're looking to get better or just learn more about option trading, whether you are a beginner or someone who's been trading options for a while. I know a lot of you trade one strategy. You're like, I trade covered calls, and that's what I do every week. And I could show you a twist on the covered call that actually can yield a much higher return, regardless of the company that you're looking at. So there's just a lot more to learn about options. I want you guys to have a full set of tools so that you can build the financial future that you like. So imagine if I told you to build a house and I just gave you some nails and a hammer. You'd have a real struggle building a house, even if I gave you all of the wood and everything you need with just nails and hammer. You're going to need a saw. You might need a leveling block. You're going to need all sorts of other things to be able to smooth out and build and hammer and chisel and do everything that you're going to do to make your house nice. If you are trading if you're trading right now with one strategy, you should probably learn a little bit more about options. And I'd love to help shorten your path. You can read a bunch of books, and most of the books are set up for people that are trading in a delta neutral kind of way, which means they are trading stock with every option that they're trading, not necessarily using income strategies that we tend to focus on. So if you want some help, I can definitely make it a little bit faster and definitely help you understand a lot faster with, one-on-one help and some group coaching as well, plus the videos. So, hey, email me if you want to learn a little bit more about that. I look forward to hearing from you guys. I always love to help. I love to teach. And most importantly, I love to trade, and I hope you do too. So have a wonderful Labor Day weekend if you're in the U.S. Otherwise, have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.